Let's get some insights in the news shaping the markets. For that, we welcome in Tammy Trenta is with us, founder and CEO of Family Financial, LLC. Thanks for being here.
Thanks.
Welcome.
Yeah.
First time at the New York Stock Exchange, right? I mean, you've been doing this a long time, but this is an iconic place. We're glad you were able to make it in. Tell us a little bit about what you're feeling. I mean, we have a winning week. Debt ceiling is now done. Jobs very strong. We got ADP, we got our monthly jobs report today. What are you thinking?
The market's strong. I know everyone is fearing this recession, and it may or may not come to fruition. I mean, the Fed is pretty much in charge of whether those rates are going to continue to go up. You know, we still have a rate announcement in June, and in June, I think that they'll probably stay the same, but I think that's...
You think they'll pause?
I think they'll pause, yeah.
Right.
But I wouldn't be surprised if they become more hawkish in the upcoming months.
That'll be interesting. So maybe they would pause now, but then raise in July, for example. Jan Hatzius over at Goldman Sachs was talking about the jobs report, just suggesting how strong the economy is, to your point, and that the economy is nowhere near recession. So at the same time, the Fed has this mandate. I mean, they must bring down inflation.
Yes.
I mean, so at this point now, do you think other things will help? I mean, things are going in the right direction, right? But we're off the highs, but still inflation's really prevalent.
Yeah. I mean, I think that continued rate hikes might damper the market a bit, but I don't really see any type of dramatic recession in the near future. I could see an argument for it a few years out. You know, certainly with commercial real estate and the loan environment with the regional banks, I mean, we've got some turmoil there. You know, inflation is around 4%, so it's kind of under control. It's not at the 2% at what the Fed desires, but, you know, I think we're making some good headway.
So what do you think about, you know, for investors? What have you been telling them? Because, I mean, we've had a lot of volatility. You'll have an up day, then you'll have a down day. You know, some people are saying you're one headline away from tech stocks, and it's really the tech stocks that have propped up the major, I mean, the NASDAQ, of course, which is at a new high, but it's really the tech stocks that propped up the S&P 500, too. What do you tell folks?
Well, I mean, we're pretty positioned in the Qs. We really like the QQQ.
Oh, you do?
We expect that to recover. We're also in the process of repositioning our fixed income portfolios. We're just in a very different interest rate environment than we've been in the past 18 months, and so trying to capture some additional yield. So, yeah, I think the market looks very strong right now. We still have headwinds, but the market is looking past that. So, but as you know, with recessions, sometimes the recession happens because of a surprise that nobody knows about. And we've known about these ongoing issues for a long time. The FDIC is addressing the regional banking turmoil, so you know, I think we're good right now.
It's interesting because a lot of folks would say that a recession might be, if we were to get one, that would be Fed-induced, that it would be mild, short-lived, not a deep, long recession. So, you know, that makes me feel a little better if that's the case versus some, you know, horrible black swan event where, you know, we really take a turn. That being said, you know, the triple Qs have done incredibly well. You did great with that. I mean, it's up 33% this year. As far as yields, you know, I was just looking at something pertaining to mortgage rates, which actually is loosely tied to the 10-year. And it ran up in May, to some recent highs and then pulled back. But the anticipation is that they will creep higher again.
Yeah, I mean, the housing market is probably the one that we're looking at the closest. I mean, not just with residential real estate, but also, you know, commercial real estate is something that you need to look at. But with residential housing, I mean, people's mortgage prices have tripled with interest rates. But wage growth has also gone up so much. So, you know, it won't really be until we start to see a tapering of wage growth and maybe more layoffs. We're still at full employment. So until that happens, maybe people don't feel that stress. I also think that, you know, Wall Street and Main Street aren't always the same thing. I mean, we see things are great, but when you talk to clients and they starting to lose clients in the marketing business, or they have, they're in the entertainment field and they're not taking on as many projects.
Right.
I think that a smart position to be is, as Al Greenspan says, cautiously optimistic, but position yourself. Don't be over leveraged.
Yeah, I mean, it makes sense because, as you said, I mean, there's not rolling recessions, but rolling issues and headwinds, and you're seeing that in different areas. And there's concern about the consumer overall and how much the consumer will spend or where they'll spend, and the fact that they're not getting the same government funding that they did, and they're facing so much inflation. They're using the credit cards, and those have really high rates.
Yes.
But I think there are a lot of people who are trying to remain optimistic here. What are your final thoughts here?
Well, I mean, last year we had 2 negative quarters of GDP.
Yeah.
That's a technical recession. Have we seen the recession yet? Are we coming off of it? I mean, we still have a ways to break even from the highs that we had in 2021, but I think the market looks really strong, and maybe we shouldn't fear the R word as much as.
When people talk about recession, they get very nervous. But now you have the debt ceiling done. You got the jobs report. Every single sector is higher today. So that supports something like the triple Qs, and at least trying to have a maybe a barbell approach. It's so great to see you.
Thank you, Nicole.
Thank you so much for being here. I'm really glad. We'll see you again soon, I hope, when you come back to the East Coast. Tammy Trenta, thank you. Thanks so much. Tammy Trenta, Family Financial.